So welcome to another day, the SimplyPips podcast. We will be discussing, we'll continue our discussion on, sorry, 1 minute. Let me mute out the noise in the background. I will continue our discussion on how to find or discover the best strategy for yourself. We started at the last episode where we tried to explain that just as our fingers are equal, just as all fingers are not equal, and sometimes, in fact, our thumbprints are different. So it is when it comes to trading. What might do well for someone might not just do well for another. I attended trainings while I was trying to seek out a mentor. I think I went through like 8 different groups before I narrowed down to somebody's way of trading that suits me. And even after I landed there, I didn't really have this knowledge that we're discussing here. I still went ahead. I played with BTMM. ICT is a fanciful name. You know, traders of ICT are very proud. They make it feel like, look, it's ICT or nothing. They will play down Wyckoff and many other things. So I was like, what? ICT is good. I met somebody trading ICT. He could tell you where price would get to, even though he never takes a trade and allows it to get there, just like Michael too. But the point is that ICT traders have certain form of precision, right? They could narrow down price to fair value gaps and other things. Uh-oh. All right, let's mute out everybody. So it was a difficult task. There are some times that by Friday into Sunday, I would, of course, most times I end Friday depressed, right? I end Friday depressed. Then Saturday morning, I'll speak some positive things. I'll ginger myself. I'll tell myself I'll not die a poor man. I'm going to make it. I'm going to do that, right? So I ginger myself. I go back. I pick the strategy. I go through it. I write it down. I tell myself, this is what I'm going to do. I thump myself in the chest. And then on Monday, the market opens. I'm waiting for my setup. My setup does not come. I have itchy fingers. I press one button, then it becomes a losing trade. And once it becomes a losing trade, adrenaline and emotions comes in. I completely forget about all the things I said I'm going to do over the weekend by 9 a.m. on Monday. And then I go on a roller coaster of losing trades and losing trades. Then I end where I started, Friday, depressed. You know, and it continued for months. And I can tell you, for some persons, it continues for years. You have to, it takes a lot of energy, willpower to break free. I was listening to Trading in the Zone by Mark Douglas. He made some statements in that audio that struck me. He said, for some people, before they come to the realization that they need to pedal down and find one strategy and stick with it, that they'll get broke first. They will be broke first. Trading will deal with them until they become broke. They become the laughing stock of their family members and friends. That is when it will sink in that, look, you are not fighting a battle against anybody, you are fighting a battle against yourself. That was exactly what happened to him, if you know Mark Douglas' story, how he left a good paying job and wanted to, go into trading, and how he discovered that so many people who were traders, who he thought were traders, weren't actually traders. They were just, working in financial houses, right? He also mentioned a particular man who was trading in the pit, and that man isn't a like a staff of any organization. He more or less trades his own money. And he does so well that people who were professionals marvel at his, competence and expertise. However, he makes most of his winnings during the mornings, and by afternoon, evening, he would have lost majority of the winnings he had in the morning. And it was causing trouble, emotional trouble between him and his wife and everything. And the guy was sinking into depression. He got to hear about Mark Douglas, and then he approached Mark Douglas. Then they went through some sessions, and Mark Douglas was able to help him see that he had a very short attention span. Very, very short attention span. Meaning that if he sets out to do anything, once he spent like 120 minutes doing that thing, he would have maxed out in his concentration. And everything after 120 minutes will be absolute blunder. So Mark told him, from today henceforth, trade for, I can't remember the number of minutes, but let's assume 120 minutes. That's 2 hours. He says trade for 2 hours. And after 2 hours, don't take any single trade. Leave, go play golf, go do something. The guy was marveled, like, what? I mean, every fiber in his body, and of course in our bodies, makes us feel like the more hours I spend on the chart, the more opportunities I see, and therefore the more money I make. Or, well, the more risk I take on, and then hopefully the risk does not crystallize, then I'll make more money. So Mark told him, don't do that. 2 hours is enough, go take a walk. And he struggled, but he did it. And the result at the end of the financial year was the best he has had in his career, because he just discovered that once he makes the winnings in the morning, he takes a walk, and he doesn't repeat the mistakes that makes him give back part of the winnings to the market. And the guy was very wealthy, right? So imagine if the guy is in a group like SimplyPips, where we chatter from morning, even 2 a.m. you send, somebody's responding to you, and he didn't meet Mark Douglas. He might have gone broke, or will never have arrived at the level of wealth he arrived at, simply because he's trying to behave like others. He's trying to trade the way other people trade. He's trying to walk in another person's shoe without necessarily understanding his personality. Some traders might have personal disorders. That doesn't mean they can't trade. There was an argument between two big traders, one claiming that traders are born and cannot be made, and another one saying traders can be made. They went into a competition, picked out people from the streets and tried training them. And ordinary people in ordinary professions became good traders in a short while. It proves the point that traders can be made if they follow strict rules. However, not everybody can trade exactly the same way. So in trying to discover a strategy that is best for you, you are actually embarking on a journey of self-discovery. You're actually embarking on a journey of trying to understand yourself. Don't mind the guys on YouTube. Don't mind the guys on Telegram. Don't mind them telling you this strategy has so win rates. Win rates do not translate to account growth. Win rates do not automatically translate to profitability. Your personality and how you interact with the market are part of the things that translate to personality and to account growth. Mark Douglas talks a lot about hesitation. Some people see, like today we had the binary class, and I took a trade live in the session, it went bad. I took the second one, it went well. If I hesitated on the second trade, I wouldn't have taken it, and I would have ended the day with the memory that I had one losing trade, right? So because you lose a trade doesn't mean the next one isn't going to work. You have to do the hard work ab initio, and that is doing what we call back test, which was what we discussed last week or at the last episode. You do your back test, and I mentioned that there are two types of back tests, right? There is back testing, like you're just skimming through the strategy to see if it has an edge. After discovering that the strategy has an edge, you need now to go do a simulated back test where you try to trade it live, even though it's a back test, as if you are forward testing, to see how your emotions will play in and to see if you have the mental capacity to handle the strategy. I remember when earlier this year, when we brought up the concept of AQZ to the trading community, right? Some persons came up to me and said, Bishop, you said so much about this AQZ. Unfortunately, I can't adapt to it. And my response was, why? And they said the reason is because you told us in AQZ that if price breaks above, that is an invalidation, we should buy. And they mentioned 3, 4, 5, 6, 7 times where price broke above, they were looking for reasons to buy, and then price sold, right? Price came back, they were looking for reasons to sell, and then price bought, right? So for one of them specifically, I can remember this person specifically, after a discussion, I discovered that the person was looking for what we call HG, right? The person was looking for a holy grail. He was looking for a strategy that won't have losers. And the person couldn't understand why, after following all the rules, he still has to accept losses. Well, I told the person, well, it might not just be for you then, but you have to change that mindset. The mindset that you get something that will always give you a winner will keep you hopping from strategy to strategy all through. I remember one other time again, while I was teaching the AQZ, I took time to explain that if you're trading the AQZ on H4, you have to know your key times. If some of you remember, we went ahead to say maybe 12 o'clock, something, we're timing the 4 hours, right? Some persons can't wait 4 hours to take a trade. They want to take a trade as soon as possible. Waiting for 4-hour PC will be practically impossible for them. They can't stand it. They can't stand waiting for 4 hours just to take a trade. Those people will trade on 2 minutes, 3 minutes, 5 minutes, 15 minutes time frame. And it doesn't mean that they are bad traders. In fact, most of the good traders I know are basically intraday or scalpers. Michael of ICT doesn't mind taking 15 pips away from EU and calls it a day. I don't know what to call that, if not for scalping. And there are several others. The mentor that taught me how to scalp using the currency strength will do a 21 grid trade. He trades grid trading and it goes for 21. So what he does, his method of trading, is that he analyzes the market and decides that at point X, price is going to go up. X marks the spot. Price is going to go up. So what he does is that he comes down here and puts, and the distance here is going to be 7 pips. So you put a buy limit here for 7 pips. Then he comes here 7 pips down and puts a buy limit again. His target is 7 pips away here. 7 pips away, that is his TP. So when he takes his trade and price goes to 7 pips straight, he's done. He'll close the trade. If he takes a trade and price comes back down 7 pips, it will pick second trade. So we have trade A and trade B. If price drops down 7 pips again, 14 pips, he will take a third trade. If price drops 7 other pips, he's going to hit his stop loss. So when price comes to point C and moves back to this point, point C would have gone 7 plus 7 plus 7, right? That's 21, which is why I call it 21 grid trade. Point C, trade C would have given 21 pips, trade B would have given 14 pips, and trade A will give 7 pips. Add them up all, you see the number of pips he's going to make from just one trade. That was his method of trading, and this guy is profitable. I tried applying this method of trading. It just didn't make sense to me why I should risk from this point to 21 pips stop loss just because I want to take a 7 pips take profit. It just didn't make sense to me, right? I even have an EA. He has an EA that trades this strategy. Let me see if I can call it up if I still have it here. That is, I doubt if I still have it. Let me see, load some of my old template. A very wonderful strategy, and the guy wins every single day. He does live Zoom sessions. We will join live and we'll make money live. We'll make money live like that, right? Okay, I'm not sure I have it. I have it again. I'm not sure I have that again. So he does that. Now, note that I learned how to trade currency strength analysis from him, but it was difficult for me to actually become that is it, FlexGrid. It was difficult for me to, let me see that inputs will go to load. I would have I've deleted the set, right? So if I click on buy now, I can set what I want, whether I want it to go 12 times. We use this thing for news. If there's going to be news, we will have, let's say price is presently here. We'll put a grid for buy here and put a grid for sell here. We allow the news to move. If price moves for 20 pips, we will make about 40-something pips in profit. If price moves, we were waking up in the night to trade this thing. We'll wait for AUD and GBP news. So some of you that don't know, when you have USD news, especially Canadian news, are very wicked. Like it happened on Saturday for NFP. If they want to go up, they will most likely come down first, right? So it's difficult to trade them, but go look at your MT4 or your trading view, narrow down to 1 minute. Look for when they do RBA news, anything Australian and New Zealand news, they rarely go the opposite direction before moving. If they're going to move, they most times just move in one direction, straight up. So it was easy for us to put our pending limits. So we'll have like 10 limits like this and have 10 limits the other way. And when price comes and spike, and for pairs like GBP AUD, if it moves for 110 pips, we would have bagged like 600 pips in that move, right? But that meant I had to be waking up every night when there's a news. And at a point in time, I just couldn't cope with waking up in the night, you know, for all of that. Right, the strategy works. The strategy is good. The concept is good. You can break even. It will close the trade automatically on its own. You can tell it when you make so number of profit, close the trade. It will close the trade automatically on its own. It works like magic, right? But I couldn't sustain it long time. Yeah, I made some money from it. Cool. Yeah, I still have 1 or 2 things I can remember I bought from with money I made from it. But I just couldn't sustain it because I had to be waking up during Asia, and that meant I was losing out on my London trades. Good strategy, but not meant for me, right? So we need to understand that a strategy being good doesn't mean it's meant for you. A strategy that somebody else promotes doesn't mean it's good for you. There are several strategies. In fact, I was asking my guys in the fostering class yesterday that has anybody heard about the lazy man strategy? I was asking yesterday. There are several strategies that one can use. Some people here need strategies that happen after the market has closed. Maybe your personality does not fit in well with fast-moving markets. you might just need to trade Asia session, or you look for when the market has closed. I'll give you a demonstration before we begin to wrap up, right? So here is the chart in front of us. We can practically pick anything. I just picked AUD/USD because AUD/USD is the first one. I could as well go to Euro/USD and there will be no problem. Let me call up two indicators here to help us mark out something. If I call up these timelines and put one at 1800, which will be like 6 p.m. my own time, and I have that to be red, then I call up another one, and let's say I put it at 1800 is 6. Let's put one at 20, and let's make it blue. Right, and let me go down to 15 minutes. If I open this first and come to daily, let me remove this point, remove this. If I come to daily, I want you to see the concept here first before we move on. The concept is that if price, most days, when price, let's go to present time, once price has moved in a particular direction, towards the end of the day, it will cool down. So if price is moving towards the end of the day, it will cool down. In fact, traders of BTMM will tell you that price will come, right? Create something like this, move, create something like this, then consolidate for the remainder of the day, right? So what you're trying to do with this is to trade just this small movement, just that small movement. So once price has traded above a previous day's high, you come around those 2 hours period towards the end of, after the end of London, wait for an engulfing candle in the opposite direction of the high or the low that has been taken, and you just trade it for 1:1 or 1:2 or 1:3, depending on what you decide, right? So that's the concept here. So let's now go down to 15 minutes and see, or even 30 minutes if you want, and see how this will play out. Right? So this is Euro/USD. Price came and took out the previous day's low. You see that? Price took out the previous day's low, which are these dotted lines. You are waiting for the lowest bearish candle. Once the lowest bearish candle was taken, and you can see it here, you take your trade at that point and take it for 1:1. Boom, you hit your TP, you move. The next day, you wait for them to take the previous day low. You come around this time period and price closed above the highest, the lowest bearish candle. Once it closes, you take your trade there, you wait for TP1, boom, you hit, you win that trade. This lazy man trade, you're not doing anything. Price came, closed above the highest, lowest bearish candle, which is that one. You pick it, price closed above it, you set your limit, price came back, picked you, boom, it's TP1. You've won that one, right? On this day, price did not close above, did not close below. It closed above, but that was earlier in the day. You're not interested. You are waiting for days that they took the high or low. Now, look at this one, and they took the high, and they kept going. You are interested in selling. What is the highest bullish candle? Look at the highest bullish candle there, right? So when price closed below it, you take your entry for a sell, and price dropped and hit TP1. Boom, you won that trade. Can you see the number of trades we are winning by just that concept? You don't have to know many things. You just need to find a pattern and use it. Look at this one again. This one didn't take out a high or low. Or if you claim it did by this tap here, then you're waiting for the highest candle, which would have been this, right? So again, this day it took out the low. What is the lowest bearish candle? That's it there. You fib it again. Lowest bearish candle. When price closes above it, you initiate a buy, boom, 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 TP1. This strategy, you go for just TP1 because you are assuming that when price moves towards the end of the day, they will go back. Will it happen all of the day times? No, right? But it may happen 70% of the time, it may happen 80% of the time. I don't have the data because I've not backtested it. But it's a concept I have in my mind, it's a concept I wish to backtest so that we can call it lazy man trading, right? Again, you come around this time of the day, price has taken a low, you're expecting to go back in the opposite direction, just a little, which is the lowest candle that it took out, boom. You are coming back specifically within a time range of 1800 and 2000, just 2 hours to watch. Price came, you set your limit, it tapped you, it played, boom, the ETP one. That's the winning trade again, right? So guys, I just showed you a concept. Now, let's assume I'm your mentor, and this is the way I trade. What you need to consider is between 1800 and 2000 MT4 time, will I be opportune to be on the chart? If you live in Asia, 1800 to 200 might be early mornings. Will you be okay to come early mornings? You live in Australia, you live in New Zealand, that will be early morning. That may be like 4 a.m., sometimes 3 a.m. Would you be willing to do that? If you live in Nigeria or West Africa, this would practically be around 6 or thereabout. 16, this 18 times 12 will give you 6. So that would be around 4 to that. Would that be a good time? Would you be in traffic? Right? Those are the things you consider, right? So once you've been able to determine that, you will now go and do what we call a back test. And the back test, the first type of back test I mentioned, is just to know, does this thing have an edge? How often does it happen? If it happens 5 times in 2 weeks, how many times does it win? And that takes us to the next point. So here you will notice we have some people's back test, right? So this is somebody's back test. The person sat down with a particular strategy. He called it back testing for scalping scalping on 1 hour time frame, when 1 hour time frame has the same TDM with 4 hour time frame. That's what is back testing. He sat down and back tested from 4th of January, right, this year, all the way down to November. Whoop! This guy really wants to be successful. And that is 11 months. He arrived at taking a total. He had a total, if he did this, he was going to have, let me see that, net 3. And this is going to have a total of about 93 trades, right? I think it's 91. If I'm taking out 1, 2, and 3, and I ended in 4, so that would be like 91 trades, right? So let's say 91 trades is going to lose 51, and he will make 42. So that makes it 93 actually. So maybe I missed out something there, right? So the win rate, if it's going for TP1, will just be only 45%. But will the person grow the account? Yes, he will grow the account monthly. If he's going for TP2, this is going to be 33. Will the person grow the account? Yep, based on this data, right? I think there's something wrong here. If you lose 51 times and you win 41 times and you're going for 1:1, you can't have a positive monthly growth. But this person did some work. And with this, the person can decide, okay, rather than go for 1:1, I will go for 1:2. I'll go for 1:3. Any day I lose, let me lose. But I'm looking for days where price will give me something like this that will cover up for my losses, right? Let's use another person's back test. Let's use another person's back test result. Right, look at this person. This person did a wonderful job, right? The person back tested 6 pairs. 6 pairs. This person wants to be a professional trader. This person is a Nigerian living in Canada, but wants to make money out of trading. Good one, right? So here we are. He traded, he checked EU, and he used a strategy. This is his trade plan. I will not make it open to everybody, but this is the trade plan. He took time to write the trade plan. He took time to work on the results, and he broke them down. This is trying to see if this strategy here that I just reviewed, if it has an edge. Does it have an edge? So simply because I mentioned one strategy doesn't mean it will have an edge. You go play, will it have an edge? then can I fit into it? But the most difficult part and the most boring part is backtesting. It's boring. Yet we got to do the boring things to make money in this industry, right? So here, even if you want to use an EA, an expert advisor, you still need to backtest it, right? You still need to backtest it. So before we go, someone should remind me, I want to show you how to backtest some of the basic expert advice on MT4. So here we are. This person took this here. We have a tool called C5. Is an index that compares price action of about 5 pairs and helps us by looking at one chart alone trade 9 pairs. We can trade 9 pairs by just looking at one chart, right? Phenomenal. So the bias was a buy on this day. DXY bias was also a buy and blah, blah, blah. And he got this. So he did it all the way down for Euro USD. He worked on only 2 months. It turned out he had 19 trades in total, and that he lost 4 and won 15 of them, or when he's trading, if his risk to reward ratio is 1:1. If the risk reward ratio is 1:2, he will lose more and win only 11. If the risk reward ratio is 1:3, he'll lose more and win only 9. At the end of the day, all right, so here we notice that the loss rate increases. If you are waiting for TP1, your loss rate will be smaller. If you are waiting for TP5, your loss rate becomes bigger. Same thing with win rate. The person did this. And at the end of the day, the average growth per month for 1:1 is 10%. For 1:2 is 14.7. For 1:3 is 18%. For 1:4 like that. So you'd notice that if this guy decides to go for 1:5, if this person decides that I'm going to trade for 1:5, that is every time I am 1:5, it means every time I reach 10 pips, I'll be aiming to make 50 pips. The person is going to have a very low win rate of 31.6%, but he's going to have an average growth of 20% per month. So you see those guys that come to Telegram and keep shouting, TP smashed. I cleared it. I predicted what NFP is going to do. My father is a market maker. The guy might just have grown his account by 10%. And this guy that lost 68% of the time and only won 31% of the time has grown his account by 20%. Right? Those are the things you do in backtest. Look at EJ. EJ, in the case of EJ, this person has seen that EJ is better. I go for 1:1. If I go for 1:1, I will make an average growth of 10%. So on EJ, anytime he has a trade on EJ, he will reach 1:1. Anytime he has a trade on EU, he'll go for anything greater than 1:1, because anything greater than 1:1 will pay him more. Whereas if you use that same principle on EJ, he will make less money. People don't know this. People just say, okay, you trade GU, AQZ, you got your this thing, take 1:1. You go to gold, take 1:2. You are just trading randomly. You will get random results. You want to trade, you have to do it professionally, which is why we tell people come to the fostering program. You won't see things like this on YouTube. Most people on YouTube are marketing something, right? We trade for a living. This is what we do. And this is how we have developed a model, right? Look at GU. The guy did GU, and if he did GU, if he's going for, he left out 1:1 for obvious reasons and went to 1:2 and 1:3. And if he did this, you have a monthly P&L of 8, monthly P&L of 5, like that. So if he did this for 4 months, he will grow his account by an approximate 37%. If he does GJ, he will grow his account by 52%. Now, so we have somebody like John who sat down and looked at the C8 pairs and the G8 pairs, right? After looking at the G8 pairs, he looked at the ones that gave the higher win rate and the higher return on investment, and decided, okay, I'm going to narrow down to only 5 out of these 8. And then those are the 5 I'm going to wake up and focus every day, right? You don't do that by just looking at it. You do that by backtesting. So you can see GJ will pay you more than GU. GU is a very popular pair, but GJ pays more. What about AJ? AJ gives 30. What about AU? AU gives 42. So if I'm going to pick my pairs now, I'll pick AU, I'll pick GJ, and then I'll take EU against EJ. And I've gotten 3 pairs. These are the 3 pairs I'm going to trade using this strategy. Once I have derived this, I then go and do a forward test. But forward test will mean I have to do it for like 2 months, 3 months before I get these 15 trades. Imagine trading for 2-3 months just so that I can get 15 trades to compare. You can jump this part or shorten it by using that backtesting tool I gave, where you simulate a real life experience. So I'll stop there. And maybe we might continue next week if I feel we've not completely exhausted this. But there is no, there is a science to finding a strategy that suits you. And it isn't sitting down and binge watching YouTube. That is not the way to find the strategy that suits you. It's actually sitting down and working on yourself. When nobody is there clapping for you, sit down and do the hard work, do the back test, find the strategy, back test it, forward test. Then you will get the strategy that suits you. Watching YouTube videos, whether by SimplyPips or anybody, is just to gather information to go do the back test. Watching the YouTube, jotting it down, cramming it isn't the same thing as being profitable, right? So I'll stop here. I mentioned I was going to show you guys just how you could back test on this. Just in passing, we can do that. We can do the whole thing another time, but this is just a rough one. So here we have, here, if you press Ctrl R or you come to view, you come to view and come to strategy tester, right? Strategy tester, you get a strategy. Let's say, let's use a common strategy. If you have your MT4, you automatically have some simple strategies in them. I think there's one called moving average. It's on everybody's, what do we call it? It's on everybody's MT4. You could look for them. I have some number of strategies here, but let's see one. Let me pick one that people love, something that is a martingale EA. Let me see if I can find a martingale EA here. I might have deleted all of them. Market, nope. Martingale, let's see. All right, so moving average. Everybody should have moving average in their so let's say you want to backtest, you want to see if the strategy works or not, then you now go do your own work. You could do that, then decide the currency pair you want to backtest it on. Let's say Euro USD. You check the time frame or the date. Let's, for the purpose of this class, let's just take October 1st till today. You check the speed. Do you want every tick, which is the most precise one, or you want control points, which is a crude method, or you want fast one? I prefer doing fast just to get an idea. Then I'll now come down and start doing every tick. You can decide the time frame you want to see. You can come to expert properties. You can decide what is your account balance you want to start with. Let's say I'm starting with $1,000. What is the lot size I want to start with? If I'm starting with $1,000, I want to start with 0.01. Let's say I want to start with 0.05, something like that, right? Then I'll okay. Of course, you can also optimize. We'll be covering that at a later date. So once I've done all of this, I can now click on this visual mode to be sure that I see what happening. I'll click on start. This is cross to sell. You can see it tried selling here and it took profit here. It took a buy here. I took a buy, took profit there, entered another buy, hit stop loss. Right, took a sell. Let me pause. This is a sell. So I've already told it what the TP or the stop loss should be. Right, it took a buy here, got out here. It was trailing, took a buy here, got out here because price was coming back a trail. Presently, is in a buy. If you check here, you see a buy. And this is it. Let's see how far it's going to go. You play, it keeps going up, it keeps going up. That's a buy. It closed. It hit the TP there, it closed. Right. So let's fasten this thing. This is the moving average, rather. Price goes above. You can come here, check your journal. These are all the trades that we're taking. These are all the trades that we're taking. This is the graph. You can see how if you are using moving average to trade, you can lose money because down, or just losing reports. You started with 1,000, you've lost in the process of trading. That person has lost 265. The maximum drawdown the person had was 343. That is the amount that it went down with from 1,000 is 310, right? The relative drawdown, all of those things, it shows you all your parameters. It automatically means this strategy doesn't work. It may mean that it doesn't work for 15 minutes, right? But it means it doesn't work, at least for the settings where it is. We may increase this to 4 hours, for example, and do a fast one, and it may get a positive result. So again, the joint report, he still lost money. He still lost money, and the graph went downwards again. So there are many things to knowing whether a strategy works or not. Because you've learned a strategy doesn't mean it's going to work. And because a strategy is working doesn't mean it's going to work for you. So I'll pause right now and then give them for 1 or 2 questions. And then we'll call it a wrap for next day.